Before you accept the amount written on your child maintenance service letter, check 3 things: the income figure they have used, the number of overnight stays they have recorded, and whether you are on direct pay or collect and pay. Because one of those details can change the calculation, another can reduce it, and the third can add 20% to what leaves your account. But there is another detail most parents miss completely. If you believe the decision is wrong, a 30-day clock may already be running from the date printed on your letter. So in this video, I'm going to explain how CMS works, what you need to check, and what process to use when something does not look right. And stay until the end, because I will give you a 7-document checklist that could make a major difference if your calculation is ever disputed. Welcome to CMS Made Clear. This channel provides independent, practical information for separated UK dads trying to understand the child maintenance service. The objective is not to help anyone avoid supporting their children. It is to help parents understand the calculation, keep accurate records, pay the correct amount, and challenge genuine errors through the proper process. This video provides general educational information, not individual legal or financial advice. CMS rules and procedures can change, and individual cases can be complicated. The information in this video was checked on June 22nd, 2026. The CMS process becomes easier to understand when you divide it into 4 questions. What income is being used? What adjustments apply? How much shared care has been recognised? And how will the money be transferred? Let us begin with the part that can affect everything else: income. CMS normally begins with the paying parent's yearly gross income. That means income before income tax and national insurance are deducted. The figure will normally come from information supplied by HM Revenue and Customs. This is the first number you should check on your decision letter. Do not simply look at the final weekly payment. Find the annual income figure that CMS has used and ask, is that genuinely my income? Which tax year does it appear to come from? Does it include a bonus or overtime payment that is not typical? Has my income changed significantly since that figure was recorded? And are there pension payments or other relevant children that should have been considered? This is where many parents become confused. They compare the CMS figure with the money arriving in their bank account each month. But CMS normally starts with gross income, not take-home pay. Those are 2 very different figures. Disagreeing with the outcome is not enough. You need to identify which input, fact, or rule you believe has been applied incorrectly. Instead of saying, this amount is unaffordable, ask, what annual gross income has been used? Where did that figure come from, and is it accurate? CMS describes its calculation as a 6-step process. Step 1 is identifying gross income. Step 2 is checking for matters that can affect that income figure, including pension payments and other children the paying parent supports. Step 3 is selecting the applicable maintenance rate based on gross weekly income. Step 4 considers the number of children involved, including certain other children being supported. Step 5 produces the weekly maintenance amount, and Step 6 applies any relevant reduction for shared care. The applicable rate depends partly on gross weekly income. At the lower end, there can be a nil, flat, or reduced rate. For gross weekly income between £200 and £3,000, the basic calculation applies. If gross weekly income exceeds £3,000, the receiving parent may be able to apply to a court for additional maintenance. Your final payment is not produced from one number alone. It is the result of several inputs being processed in a particular order. That means you should not check only the salary. You should also check the number of qualifying children, other children being supported, pension information, and shared care nights. One incorrect input can affect everything underneath it. For the standard CMS calculation, shared care generally refers to the child staying overnight with the paying parent. The first key threshold is 52 nights per year. That is an average of 1 night per week. For basic and reduced rate cases, the standard reductions are divided into bands. Between 52 and 103 agreed overnight stays, the reduction is 14.29%. Between 104 and 155 nights, it is 28.57%. Between 156 and 174 nights, it is 42.86%. And at 175 nights or more, the standard reduction is 50%, followed by an additional £7 weekly reduction for that child. But here is the detail that can cause disputes. If both parents agree that shared care happens for at least 52 nights, but cannot agree on the exact figure above that, CMS may assume only 52 nights. That can make record keeping extremely important. Keep a simple calendar showing when your child arrived, when your child stayed overnight, when your child returned, any agreed holiday arrangements, and any last-minute changes. The aim is not to build a case against the other parent. The aim is to maintain an accurate, dated record in case the number of nights is later disputed. CMS completes an annual review every 12 months, but you should not necessarily wait until the annual review to report an important change. Current guidance says an income change of 25% or more, or the paying parent no longer having an income, should be reported. That could mean a substantial increase or a substantial decrease. Imagine that CMS is using historic income from a particularly strong year. Perhaps that year included regular overtime, commission, or one unusually large bonus. Your current income is now lower. The key question is not simply whether it has fallen, the question is whether the change meets the relevant threshold and whether you can evidence it. Keep current payslips, employment correspondence, and any clear evidence showing when the change occurred. Use the correct CMS reporting route and retain confirmation that the report was made. Once CMS has calculated the amount, payments can be managed in 2 main ways. The first is direct pay. Under direct pay, CMS calculates the maintenance amount, but the paying parent transfers the money directly to the receiving parent. There are no CMS collection fees under direct pay, however, you should maintain clear payment records. Use a consistent bank reference, avoid cash where possible, and keep bank statements. The second method is collect and pay. Under the current system, CMS collects the money from the paying parent and transfers it to the receiving parent. The current collection fee for the paying parent is 20% on top of the maintenance amount. The receiving parent also has 4% deducted from the payment, so if the underlying maintenance amount were £500, the paying parent could be required to pay £600 under the current collect and pay fee structure. CMS can collect payments through earnings, a bank account, benefits, or a pension. If your case is being managed through collect and pay, do not assume you can remove the collection fees simply by sending money directly to the other parent. The official guidance states that direct payment does not remove the collect and pay fees while the case remains on that service. There are 2 separate routes that parents often confuse. A complaint is generally about the service you have received. For example, unreasonable delay, poor communication, or the way your case has been handled. A challenge is about a decision. For example, the income figure, the payment amount, or another factual part of the assessment. If you disagree with a decision about the amount, the first formal stage is normally called mandatory reconsideration. Current gov.uk guidance says this should be requested within 30 days of the date on the decision letter. That deadline is why opening and dating your correspondence matters. A strong challenge should clearly explain which decision you disagree with, which part you believe is wrong, what the correct information is, and what evidence supports your position. After mandatory reconsideration, if you remain unhappy with the outcome, there may be a right of appeal to the Social Security and Child Support Tribunal within 1 month of the reconsideration decision. A mandatory reconsideration asks CMS to look again at a decision you believe is wrong. A variation asks CMS to take certain additional income, assets, or expenses into account. These are not interchangeable. Depending on the circumstances, a variation can potentially concern matters such as qualifying rental income, qualifying savings or investment income, diverted income, or certain contact-related expenses. That does not mean every expense will be allowed. There are rules, thresholds, and evidential requirements. Before making any application, identify what you are actually asking CMS to do. Are you saying the original facts were wrong? Are you saying the rule was applied incorrectly? Or are you asking for an additional source of income or qualifying expense to be considered? Using the wrong route can delay the issue and produce an answer that does not address your real concern. Create one secure folder for your CMS case and keep these 7 categories inside it. Number 1. Every CMS decision letter saved with the date clearly visible. Number 2. Payslips, P60s, tax information, and evidence of any major income change. Number 3. Pension contribution records where relevant. Number 4. A dated calendar of overnight stays and agreed changes to care. Number 5. Bank statements showing every maintenance payment. Number 6. A contact log recording the date, time, and summary of every important CMS call or online report. And number 7, copies of everything you have submitted along with proof of when it was sent. Do not send original documents unless you are specifically required to do so. Keep clear copies, use consistent file names, and build a timeline of the major events in your case. When something goes wrong, organised evidence is far more useful than trying to remember a conversation from 8 months earlier. Before accepting the figure on a CMS letter, check the annual gross income, the other children, and pension information, the number of shared care nights, the payment method, and the date of the decision. Most importantly, separate an incorrect decision from poor service. A complaint and a mandatory reconsideration are not the same process. In the next video, I am breaking down the CMS 25% income rule using 3 worked examples, including the situation where one unusually large bonus affects the historic income figure. Subscribe to CMS Made Clear so you do not miss it. And in the comments, tell me which subject you need explained next: shared care, arrears, self-employed income, or challenging a CMS decision. Remember, understand the letter, check the maths, and keep the evidence.